Intel could shock the market with this major stake sale. Why do some businesses thrive while others struggle to survive? The answer often lies in their ability to navigate current events and adapt to changing market conditions. Business growth demands a keen understanding of industry shifts, economic fluctuations, and the evolving competitive landscape. Consider Intel's recent decision to sell a majority stake in its Altera programmable chips unit. The move, which has captured the attention of industry analysts and investors alike, underscores a fundamental truth in business. Adaptability is the cornerstone of success. Companies that fail to anticipate shifts in the market, such as Intel's declining stock value despite a temporary surge, risk falling behind. A gentle reminder: want reliable business growth strategies? Subscribe and enable all notifications by clicking the bell button. Intel could stake its future on strategic divestitures to maintain its competitive edge, but businesses across all industries face similar choices. Whether it's a technology company restructuring to remain viable or a small business owner deciding where to allocate resources, growth hinges on understanding the forces shaping the market. Intel's decision comes at a time when chip manufacturing is under intense scrutiny, with geopolitical tensions and domestic policy changes influencing the industry's trajectory. The recent discussions about Broadcom and TSMC considering bids for parts of Intel further highlight the growing demand for efficient chip production and innovative design. Businesses that ignore these global trends risk making misinformed decisions that could jeopardize their long-term success. The role of government intervention cannot be overlooked. U.S. policymakers, keen on bolstering domestic manufacturing, have signaled support for AI chip development within the country. Intel could stake its claim in this new era of tech nationalism, leveraging federal incentives to strengthen its foundry business. The broader lesson for businesses is clear. Staying informed about policy changes can unlock opportunities or, conversely, expose vulnerabilities. Whether navigating shifting tax regulations or trade restrictions, businesses that incorporate policy foresight into their strategy position themselves for resilience. Another significant lesson from Intel's restructuring is the power of partnerships. Silver Lake Management, a private equity firm, is reportedly nearing a deal to acquire a majority stake in Intel's Altera unit. Intel could stake its financial recovery on such partnerships, demonstrating the importance of strategic alliances. This principle applies to businesses of all sizes. Entrepreneurs and corporations alike must recognize when to collaborate, merge, or divest in order to streamline operations and maximize efficiency. Strategic collaborations can provide access to new markets, increase capital, and fuel innovation, all of which are critical for sustained growth. A gentle reminder: want reliable business growth strategies? Subscribe and enable all notifications by clicking the bell button. Market sentiment is another crucial factor. Intel's shares surged 16% following the news of potential sales, yet the company has still lost over a third of its value in the past year. This demonstrates how perception can influence financial performance, sometimes independently of fundamental business health. Intel could stake its recovery on regaining investor confidence, just as any business must cultivate trust among stakeholders. Whether a publicly traded corporation or a privately owned venture, maintaining credibility requires consistent transparency, strong leadership, and clear communication. Businesses must actively manage their reputations, ensuring that their messaging aligns with their strategic actions. Innovation remains the linchpin of sustainable growth. Intel's move signals a recalibration rather than a retreat, allowing the company to refocus on high-priority segments such as AI and semiconductor manufacturing. Intel could stake its future on emerging technologies. Much like businesses in every sector must embrace continuous innovation to remain relevant. Those that resist change, whether in retail, healthcare, finance, or any other industry, risk obsolescence. Companies should actively invest in research and development, explore new business models, and be willing to pivot when market conditions demand it. Liquidity and financial management play an essential role in navigating industry shifts. Intel's decision to sell a majority stake in Altera reflects a strategic cash flow adjustment, ensuring it can allocate resources more effectively. Intel could stake its stability on such financial maneuvers, demonstrating that capital efficiency is critical in uncertain economic environments. Businesses should consistently evaluate their financial health, manage debt wisely, and identify areas for investment that align with long-term objectives. Cash flow mismanagement remains a top reason why businesses fail, making financial agility a non-negotiable component of success. Customer needs and market demand must always guide decision-making. Intel's restructuring aligns with shifting priorities in the semiconductor industry, where demand for AI-driven computing power is surging. Intel could stake its revival on catering to these emerging needs, just as every business must anticipate and respond to evolving consumer expectations. Whether it's through personalization, enhanced customer service, or cutting-edge product development, businesses that remain attuned to their audiences can maintain a competitive advantage. The ability to listen, adapt, and deliver solutions in real time determines market leadership. A gentle reminder: want reliable business growth strategies? Subscribe and enable all notifications by clicking the bell button. Ultimately, the story of Intel's Altera sale serves as a microcosm of the broader business landscape. Business growth is not merely about expansion, it's about strategic evolution. Intel could stake its success on restructuring, partnerships, and innovation, just as companies in every industry must continuously reassess their approaches. The ability to read the market, make data-driven decisions, and anticipate future challenges separates the businesses that thrive from those that falter. Success belongs to those who embrace change, remain agile, and execute bold yet calculated moves in an ever-shifting world. Check out our other videos on financial news. Thank you.